on here?
He
James, you on here,
is.
brother?
Let me
All right.
find our special guest.
All right. Well, Claudia is pinning James. Guys, so this is going to be a little bit of a different call. So we're going to be going over health insurance just to get a gauge as to where everyone is at. Drop an emoji in the chat if you are A, currently health licensed, or B, we're in the process of getting your health license. And before, so I'm excited for this call because we've got the absolute GOAT of health insurance in Pinnacle on the call right now. So take notes, pay attention. But just to set the precedent, just so you guys are aware, it's in case anybody's confused, like by no means are we becoming a health insurance company or focusing on how like we're still focused on what we do best. We're still focused on mortgage protection, life insurance. So for the agents on here that are brand new, this will be helpful, but it's when you're first coming into this business, like your first 9 months, even your first year, like focus on helping families with mortgage protection, focus on life insurance, and get really, really good at that. The reason we're implementing health insurance into the business is to just increase the long term the longevity of agents and also increase your guys' profitability as independent business owners. Because I'm somebody like I came from selling health insurance. And anybody that comes from the health world knows that, bro, your first couple years, you make basically no money. And it's rough because, you don't get the advance. Obviously, the commissions aren't as high, et cetera. But the long term game of health, and James will get into it here more, it adds up and it really becomes substantial. So once you guys master, selling life insurance, you master the carriers, selling at a good clip, revisiting your book of business and hitting up your existing life insurance clients and cross-selling the health is just going to skyrocket your profitability through the roof and really give you guys some solid passive income on a monthly basis. So it's something that we're super excited about. Me and Claudia were down here in Florida. We were in James's office all day Monday, all day yesterday, really shadowing. So couldn't be more stoked. So with that being said, James, appreciate you hopping on the call, brother, and pouring into the troops.
Of course. Sorry I look so rough. My barber is coming today to the house. So ignore this mess, whatever this is today. Looking on Zoom like, ugh, gosh.
Bro, we gotta get a barber shop in the office.
I
We
know,
need.
right? For sure. I got a couple guys that'll do it. So with health insurance, and appreciate you guys like having me on the call, but it's awesome to see how many people with the health license are getting their contracts and everything done. That's huge because looking at your guys' numbers, right? That Jonah and Claudia were just going over. Some of you guys, that was your weekly submit, right, Jonah?
Yeah, weekly submit.
So the thing that's cool about health insurance, right? Especially with some of our new products, the real thing that we're focusing on, and the real thing I want you guys to hear, that you're going to hear this term a lot, is residual income, right? It's the monthly aspect of it. It's, hey, if I have a book of business, right? Just the same way you guys write life insurance, if I have 100 active clients, I'm going to continue to get paid on those clients, not for just the first year, the second year, the third year, the fourth year, and the fifth year, right? The life of the client. So a lot of the products that we have are going to have that level compensation or that residual income built into it to where, if you guys are, or let's say you're like an Anthony Buck or somebody that's writing a ton of business, if you start to convert 10 or even 20% of your current life clients, you guys can slowly get that monthly up to 1,000, 2,000, 5,000, 10,000. I've seen it as high as 50,000 a month just from clients and just picking up those clients just from the leads you guys are already targeting. So I don't want you guys to think that this is anything that's going to change. Your guys' process doesn't need to change at all. And just like Jonah and Claudia saw yesterday, just from how I target with health insurance, I focus on the health insurance first and then ask life insurance questions to try to incorporate life insurance, right? You guys are just doing it in reverse. You guys are going to target life insurance clients. And as you guys are selling them mortgage protection or an IUL or whatever the product is, you guys just need to ask a few questions just to see where they're at. And then as you guys go through some of our
Oh,
trainings and
James,
courses,
you're breaking up, brother.
can you hear me now?
He's not breaking up for me. I think it's you.
Oh,
There we go.
Sorry.
Can hear you now.
can you hear me now?
Yeah.
All right. So with the life insurance, what we want you guys to do is just focus on the clients that you're already working and just implement some basic health insurance questions to see exactly where they're at and see how you can help better their situation. So, for example, they were in the office yesterday. You guys have an advantage, I think, for me and what we're going to do on the health insurance, like targeting life insurance leads from health insurance clients. So if let's say you guys had somebody that you're selling health insurance and you guys find out, they have State Farm, which I just found this out yesterday. Jonah, what are the negatives of State Farm that you guys taught me yesterday?
No living benefits.
No living benefits. What else? It's not permanent coverage typically.
Typically not permanent coverage. Yeah,
Okay.
and State Farm has some of the most expensive products on the market.
So in that regard, I had a client yesterday I had two clients back to back that had State Farm where I was just going to let it go. Like, oh, you've already got the life insurance taken care of. Great. Where now, because of Joan and Claudia, now I have two follow-up appointments with both of them to try to change and fix their life insurance and get them on one of our products to pick up that life insurance sale. And that all was just created by just asking a couple questions about who they have their life insurance through. So does everyone here typically go through the financial inventory in their process in the beginning? And if you guys do, drop an emoji in regards to if you'd use the financial inventory with finding out budget and asking questions.
I hope everyone drops an emoji.
Yeah, there should see like a bunch of them, right? They go through
Everyone
right?
everyone uses the FI. Yeah.
Okay, so what we would want you guys to do, especially the ones that have your health insurance license and have your contracts, right? You guys are going through that process. Would it change anything in the process? And Jonah, Claudia, correct me if I'm wrong. If while you guys are assessing their budget, hey, who do you have your health insurance through, and how much is that cost per month for your health insurance? And is that for you or your family? Would any of that change anything in the process for you, Jonah?
Yeah. Yeah. Yeah, we could look at it. Makes
Do
sense.
you think that would affect that at all in
So
any
we're
way?
paying, I mean, right now we're paying about $900 a month on our health insurance.
Okay. So, but I'm saying if you were an
Sorry,
agent asking that
you keep breaking
question,
up a little bit. Our Wi-Fi is unstable. Can you repeat that question?
Claudia, can you hear me okay?
That one did break up, but I can't hear you okay now,
All right.
yes.
So I said if you are an agent and you were to ask a health insurance question in the beginning of your financial inventory, would that throw off your process or anything at all?
No,
No,
By asking them their budget on their health insurance, would it affect your sale in any way?
no.
Okay,
no.
so when you guys are doing that, what we want you guys to do in the beginning is as you guys are learning about the health insurance side and the different products, we want you guys to just start asking some of those additional questions when you're going through your process through your current clients or the clients that you're adding. So that way you guys can pick up a residual client and an income from that sale or an additional sale out of just your life insurance sale, right? Let's say it's maybe they don't have vision and dental insurance. Maybe they need a health insurance product because they're paying too much, right? So all of the products that we have, you can pick up a sale and continue to keep your life insurance. Here's the cool thing about that, right? Imagine if you guys save the money on their life insurance sale or on their health insurance and you kept their life insurance policy intact. Do you guys think that's now going to solidify them keeping the life insurance policy long term because you just lowered their budget and now you help them with not only just their life, but their health insurance? So it's a win-win in that regard because now you're solidifying, hey, if I was able to save you a couple $100s a month in your health insurance, is that something you guys would be opposed to me looking into maybe at a later date? Now that money that you're saving them on their health insurance is essentially paying for that plan that you sold, or they may even want to invest more or purchase more coverage through you guys because they have a bigger budget, right? So that's how we can incorporate this hand in hand. Now, with the sale, you guys can either do this two ways, and I'm going to kind of leave Jonah for you guys to kind of see what you guys' advice would be on this. The process I would work it is either at the beginning in the financial inventory, or as you guys are medically underwriting and going through the health insurance questions through them, like qualifying them on the application or going through the application, maybe at the end of the sale, hey, Jonah, I also do health insurance as well. Who do you currently have your health insurance through?
US Health Advisors.
US Health Advisors? Okay. And with that plan, that's running you what, like $200-300 a month?
$200 a month.
$200 a month? Okay. And are you pretty healthy? I
Yeah,
mean,
I'm
based on
healthy.
all your questions here for the life insurance, it seems like you're pretty healthy. I mean, do you even go to the doctor 1 to 3 times a year?
Never.
Okay. If I was able to save you some money on your health insurance, which would actually end up covering you the life insurance costs, is that something you'd be opposed to looking at?
Yeah, that'd be perfect.
Okay. You want to set up a call next week to kind of go over that?
Yeah, that sounds good to me.
So that's how you guys can take that same life insurance lead and now get 2 sales out of it, right? And if you guys start to do this, some of our products are going to pay you $100 to $300 a month residual. So think about if you guys do this with 10 clients a month, you guys could be looking at an additional $1,000 coming in just off the same lead spend, but now you have $1,000 coming in from the health insurance side of it, right? And then some of our products we do in advance on the vision, dental, the ancillary products, the critical illness, different things. We do have those products that we do get in advance on as well. But more or less, you guys can really start to stack this up and build that residual income.
Yeah, yeah. And James, you just want to role play? Just do a
Yeah.
straight role play. Like, let's
Yeah.
present to me like I'm a life insurance client. Let's say, find out what health insurance I have and then go into replacing my policy.
Okay. All right. So Jonah, so you guys, I typically don't work life insurance leads the way you guys do, right? I do it a different way.
Actually, well, hold on. Let me stop you there because I want to set a precedent as well. Because just so you guys are aware, same thing like we train on with annuities, where if you find somebody and they have a bunch of money in their 401k, guys, focus on what the client requested and focus on what the appointment or the one call close of the presentation is for. So help that client with their mortgage protection, with their life insurance, and then from there, set a separate appointment, like James said, for the health insurance or for the annuity or whatever the case may be. And this is where it's really important to make sure you guys are taking detailed financial inventories. So, and I hope all of you guys are, Buck's really good at this, but everybody on this call should be doing this where, save all your financial inventories and scan them in so you have a digital copy. So when you're going through your book of business, even if you call them back a while later, you're like, okay, so and so has US Health Advisors, he's paying $200 a month on. We could beat their coverage. And then boom, you can call that client back and then sell them or whatever the case may be. So, focus on that and then set a follow-up time. So let's do a role play. Let's say you helped me with my mortgage protection and
Yeah.
then you're calling me back to help me with the health insurance. And let's
Perfect.
say
Yeah.
let's say hypothetically, what I think would be easier is just let's say I don't have coverage right now. I'm looking to get my
Okay.
health insurance set up for
Okay.
regular client.
All right. So, hey, Jonah.
Yeah,
Hey, it's James. So I'm following up. We had spoken last week. I helped you out with your mortgage protection. So I know the last time we had spoke, you had said you didn't have any health insurance in place, right?
correct. Yes.
Okay. And is that just because of cost? Did you lose coverage and just never get a new plan? What's going on?
We've just been meaning to get it set up. I just haven't gotten around to it.
Okay. How long ago was it that you had coverage?
We had coverage through my last employer about 3 months ago.
3 months ago. So you haven't had coverage for 3 months essentially.
Yep.
Okay. Do you know what you were paying through your employer previously?
Oh, it was super cheap.
Like 50, $100 a month?
I think it was like $50 a month.
Okay. So typically with employer coverage, that's usually the case. Just so you don't get sticker shock, it is going to get more expensive because you got to think your employer is probably covering half or majority of the cost for you. Okay. So, are you looking for just yourself? Or are you looking for a family option?
Yeah, something for me and my wife would be good.
You and your wife? Okay.
Yep.
So, and with the health insurance, there's essentially two ways I can find you the best rates. There's plans either based off income, if you can get financial assistance, and then plans based off your health. What would you say is your estimated household income?
Household income, $6,000 a month.
6,000 a month? Okay.
Yep.
And you guys are 25 and 26, right?
Yep.
All right. I'm not sure if you guys are going to get major financial assistance, but we'll look at those options. How's your health?
Health is great.
Yeah, I know we
Perfectly
did
healthy.
that last time for your life insurance. You guys aren't taking any new medications or anything since we spoke?
Yes, correct.
No surgeries, hospitalizations, anything that would show up on a medical report?
Nothing.
Okay. So based off that, man, what I think we should do is we should look at private health insurance options. The reason for that is because they're not based off your income. They're medically underwritten. So if we can get you approved for one of those, it's going to, one, give you better insurance premiums. So it's going to be lower rates. The second is going to give you guys better benefits up front with lower deductibles and premiums. And then the third is going to be better networks. Do you know the difference between like HMOs or PPO networks?
No, what is it?
So HMO, you're restricted to doctors and facilities, whereas a PPO, you're going to be able to choose your doctors and hospitals in this nationwide coverage. So based on everything that you've told me, what I think would be great, we have a product here through America's Choice for you and your wife. It looks like that one's going to be around $559 a month. That's going to be a $250 deductible individual, family deductible 500, and that's a PPO network. How's that sound for you guys?
That sounds good.
Now I'm just summarizing this a little bit, but that's essentially what I would do and go into that process, and that's exactly how it look.
Got it. Okay. Isn't there EPO too? Or is it mainly just HMO and PPO?
Most of the plans that we have are going to be PPO. Most of the plans on the marketplace are going to be HMO or EPO, but more of the plans that you're going to be competing on the marketplace are going to be HMO networks.
Got it. Okay. And then do you deal like do you run into people with like do you do copay too? Does that fall into that category?
Yeah, so America's Choice does have a copay. So if we were to go more in depth in the benefits, really simple, you guys would just pull up the brochure. Do you want me to share my screen and pull that up?
Yeah, if you could like break down the different types, that would
Yeah,
be
I can
helpful.
definitely do that. No problem. Give me 1 second to pull that up. So this is the easy part, you guys. Once you have a client that's interested, the easy part is just explaining the plan because you're just going to look at the brochure here, right? So Jonah, your guys' individual deductible is $250 and it's $500 for family. What that means is that's what you guys will pay first. Once you've met that deductible, now everything's just going to be a copay or you're going to have benefits that are going to be applied. So for example, every time you go to the primary care doctor, it's going to be a $50 copay. So you pay $50 for your PCP. If you go to a specialist, same copay, $50. All your preventative care, so any kind of like screenings, annual physicals, immunizations, all that stuff's covered at 100%. You don't pay anything for those services. You familiar with the teledoc or how that works?
No, what is that?
So what a teledoc is, it's a virtual doctor that you can call in. They're open 24 hours a day, 365 days a year. Basically, what you'll do is you'll call into that doctor. It's a board certified physician. They'll diagnose your symptoms right over the phone, and then they'll send that prescription to your local pharmacy, which the prescriptions on this plan, you have no cost for generics, and most brand names are going to be no cost as well. If you ever had an expensive medication, we can help you out with those as well. Diagnostic testing like x-rays, labs, EKGs is also a $50 copay after deductible. And then your CT scans, MRIs, PET scans are a $250 copay. Now, in terms of like the more major things like surgeries and hospitalization, you have a $250 copay for outpatient surgery and a $1,000 copay for inpatient hospitalization. All right. Now, do you know the difference between outpatient and inpatient?
So so outpatient, so let me guess. So outpatient is not covered and it's out of your PPO network. Inpatient is within the network and is covered.
Incorrect. In
Okay.
this case, outpatient, all right. Outpatient, it just means that you have a procedure that's same day. So
Okay.
most of the time, if let's say you had a hernia surgery, right? That's typically a procedure that you go in, you're under anesthesia, you're out within a couple hours. That is typically an outpatient surgery. Inpatient is when you're in the hospital for 24 hours or longer, means you're booked into the hospital, right? So
Got
that's
it.
inpatient or inpatient hospitalization surgery. So that's the difference. So the one that's more detailed is typically inpatient, which is why it's $1,000 copay. All right.
Got it.
Make
Okay.
more sense.
That makes sense.
All right. And then there's some other things here for diabetes, which that's not going to apply to you and your family, but we do have coverage for those things here. And then I know you guys said you're looking for maternity coverage, right?
Yes, we are.
So with maternity coverage, it's a $250 deductible, all right? And then in this example right here, the client had a $7,500 charge for their pregnancy. The deductible was $250, and then because they were inpatient, it was a $1,000 copay as well. So they would have paid $1,250 instead of that $750 responsibility. Does that make sense?
That makes sense.
A good example to you guys, it's really simple when you guys are going through this and we start to understand which plans. You guys can literally go to these three examples and explain to the client, hey, this is how it's going to work with this plan. Here's exactly the examples. If you're pregnant, here's what it looks like. If you're managing type 2 diabetes or you have a break, you can literally go to this and explain it step by step with the client so they understand how the insurance is going to work and understand their copays and deductibles. All right.
Perfect.
So what a copay, and if you guys that don't understand some of these terms, I definitely recommend going through the Pinnacle Wellness Academy because it's going to break down the difference between generic medications and specialty medications, generic and brand. It's going to break down what the difference between HMO is, PPO, EPO, what the different networks types are. It's going to break down the different types of insurance between this type of plan, a MEC plan, a fixed indemnity plan. So I definitely would recommend that in terms of understanding the benefits. But this particular plan is going to be one of our go-to plans. It's going to be the level compensation for you guys. So like example, if I was to put Jonah and Claudia on this plan, and this plan, let's say it pays me $150 a month, that's for life of the policy. So if they keep this for the next 5 years, you know, that's $150 a month for the next 5 years. So imagine if I have 500 clients on the books. Starts to stack up pretty quickly.
Nice. So are you typically, let me ask you, are you typically doing HMO or PPO then for your clients, or does it just vary?
All of our private plans are going to be PPO. So any plan that you guys are going to have contracts with through Pinnacle, other than the ACA contracts, are going to be PPO options.
Perfect. I'm writing that down. All private plans, PPO. Okay. Awesome. That's PPO. Okay, great. All right. Well,
Also,
let's keep rolling.
above, I put in this text here. You guys can summarize this if you guys are some pro texters or I just kind of put this out earlier. But if you guys were to have a book of business, who on here? Jonah, how many clients do you have existing? Or how many clients do you have that are still in the books?
Oh, thousands.
Okay.
Crap
So
ton.
what I would say is if you guys want to dive into health insurance, start with your book of business, right? Take your current existing clients, solidify your life insurance business by reducing their health insurance premiums, right? And getting them better coverage. So let's say you guys were to send a simple text like this, just, hey, I'm just reaching out to you. You don't even need to say much, some of this. You could just literally say, hey, I've got some great news. When would you be available for a quick call? And just get somebody on the phone and then say, hey, great news. I'm able to do some health insurance plans on the private side that are more affordable. What are you currently doing for your health insurance? And just ask them these questions. Anthony, exactly. If you guys have the CRM, put them through your CRM. That's exactly what I did with my clients. And I picked up like 20 appointments out of this just in one day, just doing this set text with like people that have ACA that were changing plans or anytime that people need to renew.
Yeah, that's fire. So you're just so text strip them. Hey, I've got great news. When are you available for a call?
Yes, you can keep it really simple, or if you want to like make sure they have a health insurance plan that you can help and not waste your time, you could be more detailed like the text I'm putting here, but it could be just, hey, this is Jonah Lewis. I helped you out with your mortgage protection, reaching out because I got some great news about insurance. When would
Okay.
be a good time to talk? Really
Let me
simple.
let me ask you this, James. So I'm just trying to think of what objections clients would give me. The first one that comes to mind is, yeah, okay, perfect. I already have my health insurance through my employer. How would you handle that?
So employer coverage typically is the one that you're not really going to change people off of. Here is what you need to ask about employer coverage. Is it for you or is it your family? All right. If they say they have employer coverage, ask, was it just for you on that plan or is it your spouse and dependents as well? And then if they say, well, I added my family, great. Most of the time when you add your family, it makes it super expensive because they're not giving you the benefits for them. You're paying full price for them being added to on the plan. Jonah, is that kind of what happened to you? More often than not, you guys will hear somebody say, yeah, when it was just me, it was $100, but when I added my wife and kids, it jumped up to 900. Those are the people that we can typically help because that $900, that $800 increase, we can find them probably a plan within the range of 400 to 500 or even 600, right? So you can still save them, but you're only going to work with the people that he added, so the wife and kids.
Yeah, yeah. We texted my dad last night, and he because he's covered with his health insurance, but for my stepmom and the rest of my siblings, they have to pay like fully out of pocket. So I believe they're paying about 2 grand a month. So
Yep.
just roughly looking at premiums, I mean, we're going to basically be able to cut that in half.
Yeah,
Hopefully
we
get it done.
literally looked at something and it was like 980. And I
Yeah.
was like, you're freaking kidding me.
Yeah, and think about that and again, here's where like Jonah and me were talking yesterday, that type of client happens all the time where they're paying $2,000, $3,000 a month and they think it's the only thing available. Now, where you guys have a little bit more of that life insurance knowledge and skill set, for somebody like Jonah, you just freed up $1,000 a month in their budget. What if right then and there you talked about a retirement strategy or a big IUL or a way for them to invest that money that they were already comfortable with spending back into some kind of investment tool or retirement strategy or some kind of IUL or however you would structure that in that case, Jonah.
Yep, smack that $1,000 right into an IUL.
Exactly. I mean, you guys, James Starrett just did one the other day on the call. He saved the person $12,000 a year on their health insurance just in their premiums, not including getting a lower deductible, better copays. That person immediately put $8,000 a year into an, or I think it was $8,000 is what the total AP was a year into the IUL.
That's awesome. That's amazing.
Yeah.
Well, James, what else do people
I
know?
have Obamacare already with my agent. I doubt you could beat $0 a month. Any recommendation? Yeah, so those people are not going to help. So there is a client demographic that you guys want to target for private insurance. Okay. ACA is going to be lower income individuals or individuals that are high risk in health, right? The same people that you guys probably can't underwrite on a lot of our life insurance policies that need guaranteed issue. Those are going to be the same clients that you're not really going to look for private health insurance, right? What Obamacare is made for is lower income, higher risk families that have a ton of medication issues, which we've kind of determined it correlates with people that make less money. The reason for that is their lifestyle they live, there's a bunch of things that factor into that. So you're really trying to target people that are healthier, that make a little bit more money. So those clients that you get on your mortgage protection list that say their mortgage is going to be 300 to 500,000. Those are probably your clients that are either overpaying for health insurance or you can help in some case with their health insurance. Anybody else have any questions? Drop them in here. These are good. I like that one, Felix.
I have a potential client with my brother. He's going to be actually going off on his own here soon and losing his plan through work. I remember you talked about in the training yesterday that if they just wanted bare bones insurance, like they don't really go to the doctor much, that United Health would be the best bet for them to get the lowest overall monthly premium. Is that correct?
Yeah, so we've got America's Choice, which is going to be like more expensive. It's going to be the closest thing to an ACA plan with some restrictions on who we can sign up, right? So for private insurance, we've got Allstate and United and some of these other ones. That's exactly what I help with Claudia on. So United Healthcare and some of these other products are going to be great for those individuals that are like, look, I never go to the doctor. I just want to make sure I have coverage if something happens, but I can't afford what's on Obamacare, right? So we have some great, and we call those, they're fixed benefit indemnities. That's what they're called. So we'll show you guys and walk you guys through those, but we're going to have United, we're going to have Philadelphia American Life, and a few other carriers that are great for those specific people. People that are like, look, I'm basically self-insured, but I want to have something just in case.
Okay. So so the top two carriers, America's Choice and United Healthcare. So break down more in depth the differences between those two, and then
So
also how those pay the agent.
yeah, so America's Choice is what's called a minimal essential coverage plan. So it covers preventative care. It covers more things right away than United, and it has deductibles and co-payments, which United does not have or some of these other carriers. So with that plan, it's almost like a marketplace plan, but they underwrite. So similar to what you see on Obamacare, where you have co-pays, deductibles, all that. They do the same thing, but they don't put everyone on the plan. So somebody that's actively having a back surgery or something like that, they're not going to insure that individual. They're going to not, because it's going to drive up the claims and price for everyone else. So all the difference between the MEC plan and Obamacare is just some of the coverage things that they do cover and don't cover. But it's more or less like more things for like chronic illness and terminal illness. They're not going to cover those services right away. America's Choice is a little bit more expensive because of that reason, because it's basically a traditional plan where you have a deductible, you have a copayment, and people like knowing what they pay at the doctor. So that's why it's a great product. That's why it's more expensive. But the payment on that one and how it works for as an agent, that's a monthly residual level comp. So your compensation is never going to drop from the next year to from the year on after, and it's going to pay you the same every single year on that client. United Healthcare is a fixed indemnity, fixed benefit indemnity and plan. Basically, what that means is if you go in for the doctor visit, there's not a copay. They're going to say, hey, Jonah, you go in today for a doctor. They're going to pay a set benefit towards your service. So if you go in for the doctor's office visit, they may pay $100 towards that visit. The client's going to get some benefits, and then whatever's left over, the client will pay. The reason that fixed benefit indemnities are not as popular is because sometimes people don't like the variability of what they're going to pay. They want to know, hey, every time I go to the doctor, I pay this. But some people like not knowing what they're going to pay, and they're like, I never really go to the doctor. So if I pay 50 one time and 100 the next, I'm okay with that. Right? So that's really the true difference between those. And the other thing is that with the fixed benefit indemnities, they typically don't offer coverage for maternity, drug and alcohol rehab, and mental health. Right? So those are typically the three things they don't cover. Yeah.
Or Jose, can you sell military? Giovanni asked.
We can. You can work with people that are on VA. I've done that, but we typically don't do that. You can. It just depends on how their service is. A lot of clients that I worked with that I've sold through the VA, it's just because they say that their VA and the process takes weeks for them to get their medication, see people. But typically we don't work with military. They have great coverage 99% of the time. It's just if they really feel it's an inconvenience and they want something different.
Okay. So typically like VA is fine, but it's not the best quality care. So if they just want a
They
better
just
health
want,
plan.
yeah, if they're having an issue, like every time they go to the doctor, it takes 3 weeks to get an appointment, then we would sell them something else. Yes.
Got it.
And then
Madison said, how do
percentages,
you know, or go ahead.
keep going. Ask yours.
Oh, okay. Madison asked, how do you know if doctor's offices near the client, how do you know if doctor's offices near the client will take that insurance?
So
Or also
most
that would
of,
play into their primary care doctor, like, is that covered or not?
yeah, so most of the actual insurance companies, you can actually look that up right through the website. So if I share my screen real quick again, you guys can actually go right on the website of the plan, and it's going to actually show you what doctors are in network. So if I go here, you can just find a provider and you just go through this website, click find a provider here. All right, so you just do PXCS, extended PPO. And let's just do my area. So if I just do 34610, oh, that's wrong over here. 346-610. Let's do primary care and then hit search. So this is going to show you within 20 miles, there's roughly, it's not showing me the total, roughly 577 doctors that are in network. So with the PPO, you guys are going to have a ton of doctors and networks that are a ton of doctors and offices. And that's just primary care. That's not including hospitals that are in network, everything else. So more often than not, 9 out of 10 will be a network. The other thing is if you don't find them on this doctor's office list here or with this provider search, just go directly to the doctor's website. Or what I like doing is just calling the doctor with the client on the phone and saying, hey, I found it out. Or Claudia actually looked up yesterday. You guys could literally just look up ChatGPT and it'll tell you what doctors are in network as well. But more or less, you have every website, every carrier has a find a provider tab and tool. So you can utilize that, or you can call the doctor's office directly, or just look on their personal website. So if it's, let's say, like Mayo Clinic, you can go to Mayo Clinic and Mayo Clinic, and then you can look them up there and find the doctor's office.
All right. So long story short, ChatGPT is going to be our best resource.
Yeah, exactly. ChatGPT, I didn't even know that was a thing, but it does. I learn new things with that system every day.
Awesome. Okay. And then talk to us about the compensation between America's Choice and United Healthcare.
Okay, so United Healthcare, you guys will see on the Pinnacle compensation grids and everything. United Healthcare, Allstate, Philadelphia American, they're going to be higher compensation than America's Choice. So the percentages are higher. Here's the difference though. Most of those carriers have their, just like with life insurance, how some of the comps are higher than the second year, you get a very small renewal. That's exactly what happens with some of those products and carriers. So you'll typically see a high percentage on the first year or that first 6 months or 9 months because you typically get in advance. But then after that first year, when that client renews that product, you're typically going to see a drop in percentage. And typically that's 10% or less, depending on like where the spreads are in the hierarchy. But typically it's a very small residual on those policies. So that's why if they have the budget and you're trying to build a bigger book and a long-term residual, I prefer America's Choice, but you definitely still need to utilize these products for those certain individuals and just budget some reason. Budget is sometimes a problem. So these products are great for those individuals. It's just you got to anticipate the second year and third year, the renewals are not as high as what you see on America's Choice.
Okay. And then so for a brand new agent writing United Healthcare, what percentage compensation would that pay them?
I want to say it's between 18 and 21%.
18 to 21%. And
Yeah,
then the
I'll have to
following year
exactly.
it
I know
would drop
we
down
made a
to
couple changes.
about 10% or less. Less
So
than
the
10%.
next year, yeah, it would typically drop depending on what products are with it. It's probably going to be like 7% or less for a brand new agent, correct?
Okay. And then America's Choice, you have lower that second year, but you're saying the following years it pays the
First year.
same.
So like let's say you're at a
Or
14% on America's Choice year one, you get a 14% year two. It doesn't drop to 3 or 2 or 1%. You get the same comp.
okay. So ideally, if you're able to, it makes more sense to write America's Choice for
Yeah,
the
for
long-term
sure.
residual aspect of it.
For sure, because you could have 50 clients with United. The first year you may make a little bit more, but the second year you're definitely going to make less. And if you keep, and America's Choice right now has a 91 persistency across the company nationwide. So you want to keep it up, you want to utilize America's Choice if you can, because it's going to build you more long-term wealth and it's going to be more residual for you long-term. And it won't have any drop in commission ever.
Oh, and it has a 90% persistency, huh?
Yeah, 91% persistency.
That's solid. Okay.
Every month? No. Yeah, so it's a monthly breakdown. So for example, I'll do the math right here for you guys. Here's what it would be. So if it's a $500 a month premium times 14, so how do you do the calculator here? So roughly on something like that, it's 70 a month, and that's per client.
James, are you able to just for like the visual people show people the spreadsheet
Calculator?
again a little bit?
Yeah,
Yeah,
I was
that
gonna ask him to
calculator's
pull it up.
badass.
All
Yeah,
right, let's do it. Let me pull it up real quick and then we'll get it going.
that'll get everybody fired up.
Oh man, let's
Yeah, guys,
see.
so for while he pulls it up, I'm just gonna go ahead and like remind you guys, there are a ton of resources in the wellness section of the agent portal. So if you want to see what the compensation is per product, I will admit I just went to go pull it up and for some reason it's not showing up. So I've already texted Brad to make sure we get that back up. I don't know if it was just a glitch in the website. But as far as like promotional guidelines, text resources, Agent Academy, all that stuff can be found in the agent portal. So you can kind of see like what compensation is, what like how like what level do I start at? How do I increase my level? Um, different carriers. If you're not already contracted in health, you can text Ellen. Yeah, I think it's, like we said, it's pretty badass. Just having a conversation with Jonah's dad at Christmas time. He's like, yeah, we pay like $2,000 a month. And I was like, wow, that's crazy. And then I tell James that we just like pull up for like dad's age and family, it would be like 960. So like even if you're like struggling with like the cross sale like in your clients in the beginning, Like, think about like your family. Like, do you have any family members? Like, I'm thinking about my sister. She does not have health insurance through work. She went through, I think, like Blue Cross Blue Shield, although I don't know if she has anything right now. So it's like, can I help my sister? Can I help myself? None of us have health insurance. And if you're over the age of 26, you're not with your mom. So, think about those types of people as well. You can always kind of start there to build that up. And this is probably one of the most badass things ever. So this is going to show you guys, like James will explain, but it's cool.
All right, so let me get who's on here. Jonah, give me let's take one of your top and like medium producers, or like somebody that's writing a good amount of life and health, or like writing life. Who would you say is like one of your most consistent people?
Front of my screen here, Buck.
All right,
First person I
he's
saw.
got to unmute. Where's he at?
Oh, I knew you're gonna pick me, dude. I love it.
All right, yep. We got this. All right, how much are you spending a week in leads?
Like 2 to 2,500.
2,500. Okay, let's keep it at 2 because it's already there. All right. Now, how many life insurance apps do you think you're doing a week?
Last month I did 50.
Last month?
So
How
what was
many are
that?
you
Like,
doing weekly?
I'd say
What's
like
the
10,
week?
like 12, like 12. 12 is a good average.
Okay, and what's the average premium on that?
I actually can pull it up. I think I'm around 1,800 now.
So what's that math on that? $100 a month or like 130?
Per month.
What's the premium on that? Yeah, if it's
150.
150 a month?
50.
Okay. All right. So So this is going to take into consideration your life and business, right? And your total commission. So this is just I don't know the spread. I just did 90% comp. So let's just take into consideration that. All right. Now, out of those 12 life leads, do you think you could sell any of them health insurance? Do you think any of them could be somebody that you could turn into a health insurance opportunity?
Oh, of course. Yeah, you gotta ask the questions.
All right. So let's say you took 3 of those a week, right? Or let's just say you did 3 a week. Okay. What's going to happen is, and this is again this is the rookie compensation on the health side. You're going to grow it, right? So let's start here. You're going to grow your residual of 720 bucks a month. So in 6 months, if you just did 3 apps a week, by month 6, right? Just at that same production, let me go here. You're at 4,000 a month residual coming in from just your health insurance business, right? So just off the health insurance leads, you're at 4,000. Now that's covering 2 weeks of lead spend for you, Buck, and that's not changing anything in your process. I guarantee you could probably get 3 to 4. Well, let's say you start to turn that number into 4 a week, right? And then let's say you turn that into 5, or let's just say you keep it at 3. Here's what it is when you do that for the full year, right? By the next year, you're making 8,600 a month just off your health insurance business, and that's not including everything you've done per year on the health and on the life side. So the next year, you're going to be making 103,000 a year just off your health insurance, and then if you continue to add that same amount of volume, within 2 years on the health, you're at 200,000 salary plus that additional 500,000 you're making in the life insurance business. Anybody have any questions on that?
Not including annuities either.
Not including annuities, anything else. Just off your residual business or just off the health insurance business, if you do that for the rest of the year, 3 apps a week, you'll roughly be sitting at close to 9,000. And that's being conservative. You're going to be looking at, because again, this is at a $500 premium. If you worked with people like Jonah and Claudia's parents consistently, let's say it was $900, look at how much that changes to if the average premium is $900. Now you're looking at 14,000 a month. If the premiums are like these big New York clients and stuff that I've been working with, which most of the time they are family, we're just being really conservative at $500 a month.
Sure. My question is, let's say you're a full-time health writer.
Yeah.
What should be like the target for number of apps per week? If you, I mean, obviously we're gonna try and cross-sell because that's where you make, all your cash flow. But like, let's just say you were to go full into health, like after a year or two of doing this. What is an average health insurance agent write per week?
So the average, like an average agent should be close to like 700 minimum AP. If you're working consistently, 700,000 for the year to $1 million, very, very similar. But you should be doing I would say 4 to 6 apps a week minimum.
Okay.
I mean, if you're consistently working, if you're investing 2,000 a week in leads, like easily 3 to 5 apps, easily. And that's being conservative.
James, can you drop the link to this calculator in the chat so agents can just play around with this?
I have to see exactly which one. There's one that's published out. I got to see exactly which one that is. And I
Can
can.
you-
Is it on the Pinnacle website?
I'm not sure if it's on Pinnacle yet. I'll have to see if
I
if
don't
it-
think it is. Could you also show us like, cause this is like Buck's like an animal. What about like bare minimum? Like what if an agent does one America's Choice a week and let's say 3 life apps?
Okay. So let's do one America's Choice
I
a
just want
week.
to see, I just want to give an agent like a smaller
Yeah,
number
of course.
because
Let's
some
do that.
guys are average. Buck's above average.
Okay, so let's do that. Let's
If
say
you're
they're spending 100 leads a week, or let's say 50 leads, right? Let's say you get 1 in 3. Even by the end of the year, that agent's going to make like 3,000 a month going into year 2, just that one app a week. Now, if you were able to get that to 2 apps a week, and again, this is being kind of conservative, right? In 6 months at 2 apps a week, that agent is going to be close to 3,000 a month, just off of those 2 apps a week.
Guys, drop something in the chat if you think in everybody you talk to, you can do 1 extra app a week. Dude, this is about to get stupid.
Yeah.
It's on
Yeah.
again. It's crazy.
I had another question too. So that calculator you showed us in year 2, that's like also so you said after year 1 you make like if you do 3 apps, it's 50K in residual, right?
No, that's what it's no, I'll show you that again. Let me how do
Yeah.
I
I just want to clarify year 2. That's like assuming you're doing 3 apps consistently, correct?
Here, I'll show you. Yeah. So here, this is what this would be. So that question here. So like if this is an agent doing 2 apps a week, right? That first year on just the health insurance, they're going to profit 37,000. So that's basically all these months combined, 37,000. But by the end of the year, their account would be earning $5,752 a month, meaning that their next year they're going to be starting with a salary of roughly 70,000, right? Because that's
From
this
first
number
year's
times 12.
business, you're saying.
From
Like
the
if I
first year's
stopped,
business.
like if I
Now-
stopped in theory, that means I'm still generating 70K in renewal.
Correct. If you didn't
Okay.
write any health insurance year 2 and you kept an 80% persistency, that would be what you'd be bringing home just off the health insurance. Correct.
Okay, cool.
This is awesome.
If you did the same production the next year, you'd be at 11,000 a month going into year 3, 138,000, and then so on. If you just kept this production here. And then if you guys get a good take-in rate, good persistency, those numbers even get bigger. Now we're at close to like 6,700.
All right, so James, I got a question for you from your experience. How long does it take to get to 6 figures a month in personal production and health insurance? Like if you're just a solid agent, like average working 50, 60 hours a week.
6 figures in residual
Per
I would
month.
say
Per month.
per month in residual income. I would say you're probably looking at 2 solid years, probably 2 solid years of like grind, like same production you're putting up in life. You've got to be that animal on the health side. I will say that I just met somebody that he got in a head start on a lot of us with the America's Choice. He's been selling it for 8 months. He's at 47,000 in 8 months.
In monthly residual.
Monthly residual. Yeah. He's doing anywhere from like 7 to like, he's doing anywhere from like 5 to 12 apps a week, roughly like 40, 50 apps a month.
And what's like Top G doing like 20 apps a week?
Who?
Top G?
Who's that?
Just the top
Oh,
guy.
the top guy. Oh, the
Come
top
on.
guy.
So what
is,
about the Jonah Lewis of health insurance?
Yeah,
What
the
is
Jonah
he
Lewis of
doing?
health.
The shoddy of health.
The one guy I know, he's roughly doing $190,000. He's doing 190,000 a month right now in residual between United Healthcare, America's Choice, and he does appointments like back to back all day from like 9 to 6 typically.
Yeah. I mean, I'm pretty dang confident that, I mean, if I just simply call through every single one of my clients that I've already sold to and didn't spend a dime on leads, I could get 6 figures rolling in a month just off my personal business that I've written over the past 4 years. So this is really dope. I'm really excited. Well, James, we got 4 minutes left of this call. So in closing, brother, wrap us up. What else do agents need to know?
First off, I thought he said Tom G. One, because there's a guy in Tampa that's a rapper called Tom G.
That's funny.
Young Bucks don't know about him, all right? So you guys can say all what you want. And then in terms of like leads, I mean, yeah, focus on your current book of business. Like, Buck, if you're doing 50K a month, dude, like you're missing, even if let's just think you do 10% of that, right? And you just slowly start to divvy in 10%, that's an extra $1,000 a month for you, right? Like that you're just getting in with the right clients. Now, not everyone's going to fit that niche, but if you start to kind of pick it up, and once you guys start to go through this, you'll be like, okay, that person's only paying 200. I don't really need to waste my time, but maybe when that person, you'll hear it in their voice, like, hey man, what are you currently doing for your health insurance? Man, Buck, I'm paying another $2,000 payment just came out again. It sucks. You know, like they'll tell you they're frustrated. Nobody likes health insurance, but it's a need. And it's such an easy sale because everyone needs it. So once they have that trust and rapport with you, you guys are going to do these left and right, right? And you can take the same lead spend and nothing changes. And then once you guys start to slowly dabble in some health leads, maybe to pick up some life deals, because my life production didn't slow down. It only increased when I brought it into my health insurance, right? So like once you guys do that, I think you guys will do policy replacements. You guys will do a lot more. You guys will know a lot more on what they say about their life insurance and how to fix that while you're fixing their health insurance for them at the same time. But yeah, if there's anyone that has any questions, anyone else, feel free, open it up. Like I've got a few minutes here before you guys got to go. So
I'll talk to you. Thank you.
I got another one if nobody else does, but I'll let people ask away if they need to.
So customer service wise, we have a bunch of emails and different things that we're creating that'll be on the Pinnacle Wellness website that we'll share with you guys, that it's going to take away a lot of the headache that we had to go through and learn. So for example, like we have a client email sheet. We'll probably put this into Booked as well. So as soon as you guys sell a lead, we're going to have a template for well, with the leads, I did hear that. That's funny. With the leads, we'll have it to where as soon as you guys sell them, whether you sell them in America's Choice or United Healthcare, Allstate, we'll have a template built out through text and email to help redirect them to the insurance company, not so much you as the individual agent, right? Because that's the biggest issue with health insurance time is some of the times the customer service. So trying to redirect them back to the insurance carrier that's going to help them with their claims. Hope that answered your questions. That question, Gabe. I try to
All right,
report
James.
back to the
So,
carrier.
all right. So in closing, because even just plugging into your office, learning these products, what is PPO, HMO, like all these different, like it can be, it's like for me, like it's overwhelming. Like this is completely new territory for a lot of people on this call. So to simplify it down in a call to action, first of all, I mean, get your health license because you can't do anything without that. Once you have your health license, go through the Pinnacle Bootcamp course, plug into the Pinnacle Health and Wellness. James, what time are the health training calls on a weekly basis?
We do Tuesday, 3 p.m. We do Wednesday at 3 p.m. with Willis live role play.
Eastern?
Friday, yeah, Eastern, everything's Eastern. And then Friday at 11 a.m. Eastern with James Starrett, there's a Q&A. So a good process is if you guys want to learn, I'll do trainings each week. Once we have these new contracts, we're going to roll out, we're going to really start implementing even more trainings and stuff. So like, Jonah, once you guys have your United Healthcare, I'll do a week of that training on solely United Healthcare and how to sell it, the ins and outs, the ups and downs, the good and bad. We'll do the same thing every week with each carrier as we go product to product. The bootcamp is the academy is a great tool to really just help you guys understand the basics of insurance after you get your license. Like, what are these products? What are these terminology? What is all this stuff? And then from there, you guys have us always in the Pinnacle Wellness Discord if you guys ever have any questions.
Perfect. So guys, lock those training calls in your calendar and then plug into the Pinnacle Wellness Discord. So awesome. James, anything else you want to add before we let these guys go and get back on the phones?
Yeah, and if you guys don't have your health license and you guys do have clients that you're running into, feel free to just hit me up or message us in the Pinnacle Wellness Discord. We will help you sell the deal and just pay you guys commission on it too. If you guys have somebody that's looking for help, obviously, if we can get you the contract, I'd rather you make the money. But if you guys want to have us do it and just close it and be done with it, feel free to send us those as well. We can help anyone. So appreciate you guys and Jonah having us on or having me on it. I appreciate you guys.
I will
That's
just say
perfect.
one thing. I have been hopping on as many as I can. The Tuesday calls, because those have been the most consistent. The Wednesday and Friday are new. For a while, I try to hop on often. They are super, super helpful. Like James is an open book. James 2 is an open book. I don't know how to pronounce the last name. And Will is also like an open book. Like they will sit there and answer like all of your questions. Like they are so awesome. And sometimes if you get lucky, they will live close people like on the call. Like it is like the craziest thing. It's super helpful. So if anybody finds interest in this, make sure you do the Agent Academy and honestly just like start hopping on those calls. But don't skip the academy. I felt bad yesterday. I asked a stupid question and Kendall literally called me out and goes, somebody didn't do the academy. And I'm like, you're right. I have not finished it. So don't be like me.
Yeah, Kendall is my wife. For those of you guys I know, she does a lot of stuff, and she is a stickler. So the Academy is right on the Pinnacle Wellness app. You just click on the Wellness tab, and it'll
And it's
take you
under
right down
quick
to the
links.
bottom, and you just click the Pinnacle Course Academy. It's right there.
Let's go. Awesome. Well, James,
And
thank you for your time
James,
today.
sometimes
Appreciate you guys.
All right. God bless.